going on, everybody? Today we're going to take a look at Euro USD and CAD JPY on the 15-minute time frame. Now, you know what we normally do is we mark things off on the 15-minute chart and take entry on the lower time frame. Usually what I look at is the 1-minute time frame. We mark areas where we expect price that will react and change direction. What we do here is we have an area of demand and supply marked off, and when we're looking at this, you can clearly see that price broke to the downside. So we considered this as a potential area where price may come back to before changing direction. And again, you see price comes down. As it's coming down, it decides to go back up. Now, at that point, I would have considered this an area of interest, and I marked off this demand area for price to come back to. It could have kept going, but this is an area I would have been paying attention to. Now, when we drop down to the 1 minute, you can see here that there was the original area where we had marked off, running it across the chart. Price was coming back up to the area, and you would have had to decide on when the best time to get in. Now, for myself, this is different for everybody. So you can see that someone might have decided to get in at this point as soon as it touched into there, but that really wasn't a strong enough pattern for me. And you may want to look at a couple different things here. Now, price was bouncing off this several times and it came back in, but when it really looked like price was deciding to go to the downside was after it finally closed below here. And once it did that, that could have been an opportunity to get in and on a trade. Now, you can see here that it was only just over 6 pips, and you could have targeted the low. I usually target the body of the candle, not the wick, but you may decide to go for the wick, and in this case that would have worked out. But for this example, I'm just using the body of the candle, and you can see here that this was a risk to reward 2.08, which wasn't bad at all. Now this trade, you can see that it was a 21-minute trade, and on this next one here, when we're looking at demand that was created down here, we ran it across the chart, and price eventually came back to that area. And this could be tricky for some because it came in and you see this strong engulfing pattern. Now, you could have gotten in on this trade and targeted the high. You would have been stopped out likely. But you had a second opportunity where the same thing happened again. And stop loss just below, targeting the high. And this one worked out as well. Came close here to stopping you out, but that didn't happen. And you can see that it wasn't near the end of the day. When you're looking at this is Eastern Standard Time. So would have gotten in on the trade at 8:15 in the morning. And the trade would have ended at 10:07 in the morning. So it wasn't a very long trade. And the risk to reward was 2.55. And there's nothing special about this. The only reason this works well is because you're picking a specific area where price tends to react. You're not guessing. You know this happens because you can see it on the charts. It happens over and over again. And by picking key areas, you can repeat this process. You're not going to win every trade, but if your risk to reward is correct, you have proper risk management, you may have a profitable system if you work at it. Now, I want to look at CAD JPY. Okay, so this one is a little different on CAD JPY. What you can see here is price was clearly trending in a downwards direction. And what you could have done on this one, when we take a look, you can see this was an area of supply. We took all the candles from that area and marked it off as an area of supply. Price came right back into it. Now, just because it comes into the area doesn't mean that there's a trading opportunity. So what we do now is we go down to the 1 minute chart, because this is where we would have been watching for price to come back into. And you can see here, like when we're taking a look at this, there was our original area that we had marked off. We run it across the chart and price eventually came back into that area. Almost came into touching, and this wouldn't have been a good signal anyways, right here. But then price finally comes into the area here. And what do we see? Engulfing pattern. That would have been a good entry pattern right there. And there's a couple different options you could have had here. So what you could have done is you could have targeted the low here, which is fine. You could have done that. And the risk to reward would have been 3.2. The trade would have only been 54 minutes. But if you would have decided to go for a longer trade, what we can see here is there's the low of the leg. Now, you could have targeted that as well and managed your trade as you went. And if we take a look here and we run this across, you can see in this case, price worked out. And it was also within the same trading day, so you wouldn't have had any issue with the spreads. The only thing you would have had to be sure of is there wasn't any news events in play. If there was, you may have considered just to close out the trade and take profits. But this happens every day. So there's opportunities. You just got to look for them. It doesn't mean you're going to get them all right, but doing this can help improve your odds. And that's it for today. So until next time, bye for now.